The markets are open this morning, and the Dow surged to a record high amid news of another Trump presidency. The economy was top of mind for voters in this election. Trump ran on the promise of tax cuts and imposing new tariffs, which could end up raising prices for American consumers.
I want to bring in CBS News business analyst Jill Schlesinger for more here. Jill, thank you for joining us. Give us a breakdown of some of the tariffs Trump is proposing and the impact it could end up having on our U.S. economy.
Well, I mean, they had been talking about across the board tariffs almost on every country. And obviously, China has always been a focus. A lot of those Trump tariffs that were put on China were extended by the Biden administration. But to be clear, the tariff picture really complicates the story of economic growth, because if you look back in time, even just back to the Trump first administration, tariffs actually slowed down economic growth and caused prices to rise. And so it's going to be tricky. If these tariffs do come to fruition, they could actually increase the cost of some of the goods that we import from overseas. And you might say, well, okay, great, then I'll just buy the U.S.-made competitor. But in a lot of categories, there isn't a U.S.-made competitor. We kind of learned this with washing machines and dishwashers last time around. So we'll have to see. Generally speaking, tariffs are said to increase prices, which would also complicate the Federal Reserve's issue around trying to bring down the inflation rate. So, you know, we'll have to wait and see the details.
Jill, I want to ask you more about what we can expect from the Fed. But as you were giving that answer, our viewers were seeing the New York Stock Exchange and a lot of green. So I want to start with that because we know that the stock market loves it when there's an answer, when there's certainty. So at some level, the fact that we have a decision today meant that there was going to be a boost. But talk to us about how investors view a Trump presidency in particular, and how the Fed is going to take all of this in and how that might affect their decision on interest rates tomorrow.
Well, okay, so the first thing to remember is that from the Trump administration part one, now we have version 2.0, right? We know like kind of what the pathway is. And the pathway is lower taxes, right? And also an easier regulatory regime. And I think that there's something that a lot of people may have missed in that those tax cuts that came in 2017, at the end of the first year of President Trump's first administration, there were two components. There was corporate taxes. They had a permanent reduction. But the individual tax rates that were all changed, and taxes did go down across the board, those were set to sunset at the end of next year, meaning we were supposed to go back to the January 2017, and with the re-election of President-elect Trump, what we now know is that those tax cuts are going to be enshrined at least for another 4 years. And I think that's part of the rally today. But the other aspect of a less invasive regulatory regime can mean very good news for companies like banks. Big banks have been complaining that, you know, the Fed and the enforcement of the SEC has been very hard on banks. And so the lightened touch of regulators does kind of build a pathway for some companies that benefit from that type of regime. Look, altogether, as you said, it's sort of a burst of energy, a 3% increase. It's really good news for investors. I will point out on the other side, for diversified investors, your bond positions are getting killed today. And the reason is that there is a sense among bond investors that we are going to see higher inflation. The Fed is going to have to keep rates higher for longer. And even if they cut, which they're expected to do tomorrow, that it will be a longer path to bring interest rates down for the Federal Reserve amid a Trump administration.
All right, Jill Schlesinger, thank you.